their combined weightage on the index could move anywhere, this or that. But for now, we're holding out well in the green. Let's then take perspective of what or how the FII community is viewing India right now. We have with us Mugunthan Siva, the co-founder and MD, India Avenue Investment Management, joining in on the show right now. Mugunthan, great to have you in the studios, and I guess you're coming back to India after a long hiatus of 3 years. What's changed besides COVID off?
Well, I mean, there are no evident signs of COVID today, but I think one thing that immediately strikes the mind is infrastructure. The amount of infrastructure that's happening in Mumbai, which is witnessed by the traffic and the conditions.
And the AQI levels.
Yes, correct, is amazing. And everywhere we went, there are more roads, better highways. The metro is going to have an obvious impact. So it's there. It's evident that the story is there to be played out. Obviously, it's going to have challenges along the way, so that needs to be addressed.
But you've been in India for almost now 3 weeks, and you've almost done an India darshan. So aside of Mumbai, what have been your other key takeaways? If you had to do a SWOT analysis for India, the strengths and the weaknesses, the opportunities and the threats, how would you classify them?
Yeah, I would say this global slowdown or recession that might be imminent is going to pause India's recovery to some degree. And that's a bit of a pity, because I feel that when we talk to the businesses, founders, management, we get this feeling that there's a vibe that, they have capacity, they want to step in and take part of what China was doing before, the whole China plus one thematic. And India, it was probably India's moment, but it's just going to be delayed a little bit, I think, rather than, set backwards. So it's a matter of waiting for that moment. And this sell-off a little bit, if you would call it that, is probably providing another good entry point as a foreign investor.
So providing a good entry point, so which are the areas that you are the most bullish on? I see that in your portfolio, you're quite overweight when it comes to financials, IT, etc. Is there where you're adding more into your portfolio?
I think it's a mix. So the way we look at India is, we know that we can't pick Indian stocks sitting in Australia. So what we do is, as a process, we tend to hire locally based investment managers as our advisors. So our portfolio tends to be a subset of their thinking. And generally, at the moment, information technology, we're a little bit more bullish, let's say, than the street, because we're not taking a view of just the US recession and slowdown. We're taking a longer term view that that's a space where Indian companies can continue to win market share. Pharma will probably be a similar story over time. Yeah.
We had Rajiv Jain of GQ Investments on the channel in the morning, and he's put in about $1 billion plus, about $2 billion into a dining group of stocks. He believes that the renaissance for Indian infrastructure has arrived. This is no longer a complicated sector, it's an easy sector, and this could be the high growth sector for India in this decade. You don't have infrastructure stocks in your portfolio. Why is that?
We have some exposure to infrastructure, but I wouldn't say direct, like the Adani Group type exposure. And that's because, I guess, from a transparency point of view, it's been a difficult industry. So we have tended to play it more through ancillaries, might be cement companies, or it might be other aspects of infrastructure, pipes, areas like that, rather than specifically a pure infrastructure play. But I think as that becomes more transparent and as we get sort of more color, then there could be some direct plays also in the portfolio.
There would be an election cycle next year. And markets, at least Indian markets, last 3 election cycles, 6 months ahead of the election, they get into a hibernation mode. Do you think this time it could be different? And what is the importance for you? Because if you have to invest for a couple of years, then there could be volatility because of 2024 election cycle.
So as you would have witnessed over the last few years, there's been 2 markets. One is foreign investors and local investors, which are quite different. So from a foreign investment perspective, I think I hear in India a little bit of bearish thinking around, macro is getting more difficult. But from a foreign perspective, you have to remember there's no other economy in the G20 that's going to grow at the pace that India is. So I would think the next few months are a bit of a pause because China was so undervalued. So there's a little bit of interest towards let's play, cheaper, less value orientation. But I think investors will come back for India at probably some point later this year or into next year.
Would it be the obvious names, more of the same that they would be tempted to pick, IT, banks, financials? Or would you think that maybe infrastructure, considering you yourself have observed things on ground, is that going to be a big attraction point?
No, I think that's a good point. The story of the last decade, which was low interest rates, growth companies, high quality ROEs, that's still always going to be attractive, but valuation will be more important going forward. So, when you have higher interest rates, that acronym TINA is not the same anymore. So people will be looking to buy the growth story, but not pay too much for it.
So if a client watches you on ET now and says, look, Shiva, I love your interaction, I like your thoughts, here's my money. You can invest it the way you want, no question asked. I can digest a 20% volatility, 15% downside, but my friend, you could double my money in 3 to 3.5 years. How would you invest that? No questions asked, 3 months, 3 years, 3.5 years, double the money.
Yeah, so look, I think the number one story for India is this manufacturing, the PLI scheme, and outwardly facing businesses that can also benefit from local scale, but also benefit from what they can pick up in market share around the world. So for me, any business that has the benefits of a strong capability locally, but has external presence, that's where the money will go. 3 years ago, at the end of 2020, the index was full of consumption and banking names. I think that will look different by 2030. So this transition towards perhaps where we were in 2008, where you had more capex-oriented businesses or manufacturing businesses, that will take place.
Did you meet any of those companies on your recent visit?
In fact, I think most of the companies we met were in the sort of infrastructure, manufacturing space. We did meet with ICICI Bank and Mahindra, but that's also showcasing the India story. We can't neglect that those sectors are important.
Well, absolutely. But you talked about the FII view on India, and of late we have seen, in fact, for many months now, we have seen the FII outflows happening in India. And since we touched upon the Adani issue and they have a large presence in Australia as well, how's the FII view on India changed with the entire Adani saga? Has it changed at all?
So in our fund, we don't have anything else but an India fund, so we will keep investing regardless. But I think most Australians and New Zealanders invest in India through an emerging market fund. So today, it's simply a case of India's had a fantastic period, and there is some money coming out and going to other markets, which will return. In terms of the Adani exposure, there was obviously concern around the name because people don't read the good news, they only read the bad news. So, there were concerns around what is this group, how they got to this position, where to from now. But our view is, at the end of the day, you want to own the India story. You're obviously conscious of the valuation, and it's not going to go away. That's what we keep telling people. It's not a 12-month story or a 2-year story. This is a 5 to 7 year story.
So which cricket team do you support? India, Australia, or you have a choice to support Sri Lanka also?
Yes, you've done your research. It depends who's winning. No, I think, look, the heart of hearts belongs with Australia on the cricket field, but India is probably my second favourite.
No Sri Lanka?
No.
Yeah.
No. I think those days are gone.
Just to wrap it up with one final question, what are your return expectations in dollar terms from Indian markets from next 3 to 5 years? Because unfortunately, the natural direction of the Indian currency is always southbound. It's never northbound. It may remain in a range for a couple of years, but then just one bad year and it goes down 5%. In dollar terms, what are you indicating to your clients in terms of India returns now?
Okay, so I'm going to answer this from an Australian dollars perspective because that's quite different to US. Australia is a commodity-driven currency. So when commodity prices rise, the currency is strong. And so India is actually a perfect hedge for an Australian because it's a commodity importer versus an exporter. So, when we talk about returns, yes, we know that today commodity prices could rise and the Aussie dollar might do well. But it's also from a portfolio perspective, it makes sense to own India. Like it does for a Canadian or a Norwegian, anywhere where the economy is influenced by commodities. So from a return perspective, it's kind of difficult to pin without a horizon. But I would say, you know, the first 6 months of this year will probably tread water for a while. And then after that, I think the story will pick up again. There is definitely increasing interest from the foreign community. It's now a matter of, I don't want to pay excessive valuation. So I think the next India 15 times earnings moment, you'll probably get a flood of money coming towards.
Okay, on that note, we'll let you go. Have a great rest of the trip here in India. Good to have you on.